Hey everybody, welcome back to collegemoneyforme.com. Chad here. Now we're going to talk about loans. Yes, one of the unnecessary evils, right? No, just kidding. They can actually be a great help to helping you finance your education. There's a lot of us that once we get through that scholarship portion, um, sometimes based on time or effort, applying for scholarships is it's a full-time job in itself. I mean, it just is. Hunting them, finding them, um, and being able to apply. There's one every aspect of what you will have in financial aid involves work. There is no such thing as necessarily going to college for free. You have to earn it somehow, whether you get a job and make money, whether you apply for scholarships, whether you apply for loans, pay them off later. Either way, gotta earn it. So the cool thing is with scholarships, of course, I would highly suggest, especially if you're in high school or if you are in, like I was in the community college getting ready to transfer out to university, spend as much time as you can going after scholarships while you can. Some people will be like, yeah, well, I might not have a chance at winning this one, so why should I spend my time doing that? That's a good question, which is why, as we said earlier, you should be able to have your game plan in life and then in terms of what you want to do in terms of your pursuits, and then you can use tools like FastWeb, as we suggested in the scholarships page and also on this page, to find those scholarships that are tailored to your needs, who you are, and what you will be doing with your career moving forward. Now, regarding loans, there are two types primarily here in the USA, as if you're going to school here in the States: federal aid, private aid. Now, federal should always be the first options that you try to go to and exhaust before going to a private option. Now, why? There's a couple positives, pros and cons that go with that. First of all, the federal aid, all you have to do is fill out your FAFSA, get your taxes done, get your information in, and the school will process that for you and let you know how much you qualify for. It saves you so much work. The application process is far more simpler than what you would have to do necessarily going for a privatized bank loan or credit union loan or something like that. We'll touch that in a bit. But uh, number two, interest rates are the lowest you could probably get. There are not too many privatized scholarships out there that will give you the type of interest rates, long-term, short-term, etc., over the period of the loan that can compete with the federal loans. I believe the federal loans usually fall around 2%, 2, 3%, maybe. It depends on what the rates are for that year and how the things are in the economy and everything, I think. But I think it falls usually around roughly, say, between 1.5 and maybe 3%. Don't quote me on that. That's something you have to look further on that. Privatized scholarships can be a little more. Sometimes they can be low in that 2% range. Sometimes they might be a little higher, 4, 5, 6%. You know what I mean? Maybe even more than that. Okay. So in terms of applying FAFSA for the federal loans, and then of course the private loans, we've got some links down below, some banks you might be able to go to here in the States that offer different types of loans. Now, the processes they have for applying are very similar usually. Um, the privatized banks are, they're individualized in their applications, but their effort is usually the same. Um, with federal loans, for example, like I got into a period when I was out of school where I was able to defer my payments. The interest still accrued and was going up, but I was able to defer my payments on an unemployment status because I didn't have a job at the time and I wasn't back in school. And then I think I was also able to continue to defer it once I got back into school, which was really nice because once those student loan payments start hitting you, man, and you don't have a way of paying for it, it can be a pain in the neck. Now, some other types of loans, like like a house mortgage or a car payment, whereas if you miss a month or two's worth of payments, then all of a sudden you're in the doghouse with the creditors, and they have the right to repossess your uh, car or house as collateral for the loan not performing. You have more flexibility. These people that create these loans for education understand that you're not necessarily going to be into a source of income in the workforce immediately. Some of us get jobs right out of college. Some of us takes a little longer, takes a few months, maybe even a year. Depends on what your field is and what where you are willing to go to try to find work. Um, Repayment options are usually very flexible in terms of communicating with these folks. If you ever run into trouble or issues making payments, just pick up the phone and talk to, the federal processing, I can't remember the name, the Federal Processing Agency or Office or something like that for the FAFSA, um, or whoever they have outsourced the loan to, as well as in the private loans, just picking up the 800 number and calling the bank and talking to a loan representative saying, hey, maybe I've ran into a situation where I'm unemployed, and usually they'll be able to work with you on that. If you're unemployed or having hardship or something like that, that's one thing. Let's also talk about loan forgiveness for a brief second. Teachers in the United States, if you are going to be a teacher, I have a couple friends of mine that qualified for this. Usually, if you are working in a low-income county, as a reinvestment that the government wants to have education boosted in that county to help those students garner college educations and become better, productive people in the workforce, I believe if you put in 5 years in a certain county consecutively, you are able to qualify for up to, I believe, it's $13,500 in loan forgiveness. And that's huge. I mean, I have a couple friends of mine that have well over $50,000 worth of debt, and they qualified for um, the loan forgiveness, and now they knocked off almost 2 or 3 or plus years in their loan payments in terms of before they get their loans paid off. It's a huge benefit in terms of being able to give back. And there's other types of things that you might be able to find when you were in the workforce that people might be able to help you pay your student loans off or help you go to school and finish your school. We'll talk a little bit about that in the non-traditional aspects in the internship sections probably. But for now, those are the main ideas that we'll be covering in the text below. Hope you enjoy. Please read carefully and take what we have into consideration as we're going to, we want you to do loans wisely and securely and without getting into too much trouble down the road, and that's what we're here to help for in this section. Okay, talk with you soon.